the world is going to be replacing the dollar with gold. And this is something that is long overdue, and it has profound implications for the global economy, most specifically for the United States.
Is silver and gold, are they highly manipulated markets?
I thought the most recent big drop in gold and silver was, in fact, a coordinated effort. I do think several players, deliberately work together to manipulate the price down. If you're in gold and silver, you're not in a crowded trade. There's hardly anybody else there. I mean, Bitcoin is as crowded as you could be, right? I mean, you go to a Bitcoin conference, I've been to several now in the last year, and these things are enormous. And some people are there. That's where you need to be worried. Look at MicroStrategy. MicroStrategy's down now at this point almost 10%. He spent 5 years and $54 billion on Bitcoin. And all he has to show for it is a 10% loss.
What do you like more right now, gold or silver? Hey everyone, this podcast is not investment advice, and I'm certainly not a financial advisor. Just a guy who spends too much time reading about markets. Before investing, do your own research, talk to a licensed advisor, and remember, risk is part of the game. All right, Peter Schiff, President and Chief Economist for Euro-Pacific Asset Management, is back on the pod. It's been a year since he was last on, and I've got to say, a lot of what he laid out has played out uncomfortably well over the last 12 months. He warned the dollar would start sliding. It's down roughly 10% since then. He said inflation wasn't finished, even though a lot of people said it was, including Trump. And he was right on that. And he told us if the dollar really started to roll over, gold would shift into a whole new gear. Fast forward to today, gold's up big since that conversation. But to me, at least, this doesn't feel like a normal bull market. It feels more like there's stress in the system. There's big swings in gold, a new Fed chair nominee, and a macro backdrop that, again, to me, seems to be getting more fragile by the day. So this isn't a victory lap episode. This is more of a pressure test. Peter's thesis obviously has been very, very right so far. But I want to know what could happen next. What does he see that most investors still might be missing? So Peter, great to have you back. Thanks for joining me again.
My pleasure. Thanks for inviting me back.
So you've been right on gold, obviously. I think you're the foremost spokesman for the precious metal for sure. But what I'm struggling with is, where are we in this move? Are we still early, or are we now kind of in a more speculative, dangerous phase with gold and precious metals?
Well, I think this is going to play out over many, many years. So I still think there's a way to go as far as where the price of gold is ultimately headed before everything collapses. But I think that gold's rise is a indication that the U.S. dollar's days as the reserve currency are coming to an end, and that the world is going to be replacing the dollar with gold. And this is something that is long overdue, and it has profound implications for the global economy, most specifically for the United States.
Kind of on that note, when you see, like we just saw a pretty violent shakeout in gold and silver, then a relatively fast rebound. In your experience, though, is that kind of normal behavior in a precious metal bull market, or did something structurally change, for example, when Warsh was announced as a new Fed chair nominee?
I mean, I don't know what's normal. We had a very big move up, and then we had a faster move down. We haven't wiped out all the gains, obviously, but a lot of the recent gains were wiped out, particularly in silver, much more so than in gold. And, of course, silver rose more than gold, so the harder they rise, the harder they fall. But I think it's also getting caught up in maybe a lot of forced liquidations and margin-related selling that is stemming from the widespread losses in the crypto space. And so that could be spilling over into the metals. And I think that would be short-lived. If that is, in fact, the case, this is just temporary factors, and I would expect gold and silver and related equities to bounce back very quickly. but not so for crypto. I don't think crypto is anywhere close to a bottom. I think we've got a long way to go to deflate this bubble.
I want to jump into Bitcoin in a bit, but just staying on gold. So, I read the comments on a lot of our podcasts, and we've been obviously having a lot of guests come on talking about gold and silver lately. And I read a lot of kind of industry guys and some of their content that they publish, and you hear a lot about manipulation claims every time we see kind of a massive move downward in gold or silver. For some reason, not when it goes up, but usually when it goes down. You have the peanut gallery coming out and saying, oh, it's highly manipulated, the banks are such and such and such. But how much truth is there to that in your view? Is silver and gold are they highly manipulated markets?
Well, I came to the conclusion that I thought the most recent big drop in gold and silver was, in fact, a coordinated effort. I do think several players, deliberately work together to manipulate the price down. And I think the Trump administration may have, in fact, been a part of that. The way it was structured around the premature announcement of Kevin Walsh, and the way Walsh was presented to the public and the financial media in a way that would somehow get people to believe that there had been a change of heart at the administration, and Trump no longer wanted a guy to just cut interest rates, that he wanted a real independent inflation hawk that may be tougher than Powell. And I never bought into that, but I thought that there was a reason that they were representing it that way. They were trying to undermine the case for gold and silver, because a lot of the money that may have come into gold and silver was moving there based on the representations Trump had made, and the idea that the Fed would be a lot less independent in the future than it was in the past. Even though it was very political in the past, it would be much more so in the future. And that was a reason that people were buying gold and silver. And so I think they tried to push back against that to try to bring prices down, because the big run-up in prices, I think, was concerning to the administration.
Why, I think I know what the answer might be, but why... Besson did come out that same week, Powell did, and say, we don't really pay attention to the price of gold and so forth. But why is gold's rise a threat if the U.S. has so much gold in Fort Knox, as they say? Why is gold a threat to the U.S. dollar?
Well, because gold's the most viable alternative to the U.S. dollar. A lot of people, just look at other fiat currencies and say, well, the euro's no good, the yen's no good, so we win by default. We're the cleanest dirty shirt in the hamper. But the real alternative to the U.S. dollar is gold. And so if gold is becoming more attractive, that is a concern to the U.S., because to the extent that the world uses gold instead of the dollar, that is a big problem for America, because we count on the world holding dollars. We need the interest-free loans, basically. We need to be able to export our inflation. We need to finance trillion-dollar trade deficits and budget deficits, and the world does that. But if the world's not going to do that anymore because they're going to hold gold, then that's a big game changer, and that's a big problem, because it means a dramatic decline in the American standard of living. It means much lower asset prices, much higher consumer prices, much higher interest rates. There's a lot of problems that are going to manifest if gold replaces the dollar. So that's what they're worried about. So
the one thing, just to kind of play devil's advocate, though, is gold standard has been tried before, right? And successfully. However, since going off the gold standard, the global debt, the world economy functions off of debt now. And so to go back to any sort of gold standard, to me, doesn't seem plausible. Is that a realistic thing, that the world could go back to a gold standard?
It's very realistic. I mean, for most of history, the world used gold as money. And central banks held gold as reserves when we originally had central banks. The dollar became a substitute in an era where it was not only backed by gold, but redeemable in gold. So yes, it's not only probable that the world's going to go back to gold. It's likely, and it will be a positive thing. Gold works very well as an anchor for a monetary system or as money itself. Fiat currencies do not work well, as we've seen. They are abused by the issuer. It leads to massive inflations, boom and bust cycles. It's not. That's what doesn't work. And when people say the gold standard failed, it's never failed. It's always succeeded. It's humans that have failed to stay on the standard. When the time gets tough, they abandon it because they don't want to stay within the rules or the confines that would be imposed by sticking to a gold standard. So that is the problem. The gold standard is actually a solution. The problem is that, when times get tough, you abandon it rather than, doing the necessary but politically difficult things that need to be done to maintain the standard. And the only reason that it becomes necessary to do those tough things is because of what governments do to undermine the standard. If we just strictly followed it, then we would never have any problems staying on it. It's just because, we go off the wagon so much that it's tough.
Mm-hmm. But just hitting on that one point, though, because there's so much leverage in the system now, if we were to go back to a gold standard, wouldn't that unwind the credit markets? Either that or would gold just go to $200,000 an ounce? Like, how would the credit market function?
Well, I don't know, if you would take existing debt and denominate it in gold again at some kind of exchange rate, but obviously the gold price would have to be much higher than the 5,000 it's at now to make that even remotely possible. Mm-hmm. But for foreign central banks to just go back to gold as the primary reserve asset, that's very simple. It doesn't really require anything. They just hold a lot of gold, and they don't hold dollars. they don't buy U.S. Treasuries, and then when they settle in trade, global payments, they use gold. They don't use dollars, or they use a neutral currency. Maybe it'd even be a cryptocurrency that's backed by gold and tied to gold to settle their trade.
So let's. I just want to hit on this because this seems to be everybody's or a lot of people's reasoning for gold's latest recent sell-off. Let's talk about the Fed chair nominee, Warsh. He seems to believe in lower rates, but doesn't think the Fed should increase its balance sheet, which I think now is like 6 or 7 trillion. If Warsh actually follows that approach, lower rates without balance sheet expansion, what do you think that does for gold?
Well, I don't think it's possible, really. I think that the only way to lower rates would be to expand the balance sheet, because the only way the Fed's going to lower rates is by going into the markets and buying up the paper to force down the rates. So, it's going to happen. If you want lower rates, that's the only path to get there. Because otherwise, I mean, if the Fed just says this is the rate, but nobody wants to lend at that rate because it's too low, then what happens? Right? You got an interest rate that is meaningless because nobody will lend at that rate.
Yeah. So your take is that, if Warsh comes in, he's going to have to, well, if he wants to lower rates, he's going to have to increase the Fed's balance sheet.
Yeah. Yeah. I mean, and that's why the Fed went back to increasing the balance sheet recently. I mean, they needed to do it to keep the rates low. And I think ultimately the real goal, right, the president makes it pretty clear that they're looking at long-term rates, they're looking at mortgage rates. And there's no way, even if you lower short-term rates, there's no way to bring down long-term rates without the Fed going into the market and buying long-term paper, because there's no real demand in the private sector for the debt. And, of course, if foreign central banks are moving away from the dollar to gold, not only don't they need to buy any more treasuries, but they're going to be selling the treasuries they've got, or at least not rolling them over. And so that's a huge problem because now the government has to find alternative buyers. And if there are no alternative buyers, then the buyer of last resort is going to be the Fed.
So I know you're in the camp that the U.S. dollar is going to lose its reserve currency status, but we've been, watching this kind of slow decline now since pretty much '08. So let's talk about that reserve currency status and kind of where things are at. The dollar, to me, is still, obviously for fiats, is still the most dominant. But for years, countries have been calling for a reduced role of BRICS alternatives, gold settlement talk, all of it. Are we closer to a real changing of the guard for a world reserve currency? I look at it like with the U.S. flexing its military might, especially lately. I kind of think that's what backs the U.S. dollar is the strength of the military, the Navy, and
I think that backfired. I think by threatening to use our military might to just take what we want, not just going in to Venezuela and basically arresting and taking their president, whatever. But the overtures regarding Greenland, I think, did not resonate very well, where Trump just says, we need Greenland strategically for the United States, so we think we should just take it. And if we can't buy it at a price that we determine, then we're just going to send in the military and we're going to take it by force. That made the world take a step back and reassess the relationship with the United States.
Yeah.
Because one of the benefits of supporting the United States with the reserve currency is that we do have this big military that we otherwise could not afford to maintain, and that we're supposed to use as a defensive force for our allies. We're not supposed to threaten our allies with the very military that they help pay for.
In a world of rising deficits, currency dilution, and market volatility, many U.S. investors are choosing to diversify their retirement accounts with assets like physical gold, silver, and even crypto. This video is sponsored by iTrustCapital, which offers a platform for Americans to hold physical gold and silver, as well as crypto, directly inside a tax-advantaged IRA. Designed around transparent pricing with clear premiums over spot and no hidden storage fees, iTrustCapital offers something that still isn't standard in the precious metals IRA space. So if you're a U.S. investor looking to learn more about owning gold, silver, or crypto inside an IRA, use the link in this video description. Americans may be eligible for a $100 funding bonus when opening and funding an account with iTrustCapital.
And so by doing this, we let the world know of the dangers that they are enabling. So not just that we, showed that we could sanction you. If we don't like what you're doing, we are going to sanction you and kick you out of the SWIFT system, or we're going to seize your dollar reserves. Not only is that threat out there, but now there's an actual military threat that we just may invade your country if we decide that we need something that you got. And there's nothing you could do about it because, we're so tough. And so that creates another incentive to take the U.S. down a few pegs and to weaken us militarily. And if they weaken us financially, then they weaken us militarily because we can't afford to pay for all this military. We're going to have to cut military spending if the dollar loses its reserve status.
Yeah, and I think trust in American institutions, whether it's the administration or the economy or banking system, whatever it may be, I think is eroding both domestically and abroad. And I think that's also another threat. Like even not little things, but very serious things like these Epstein files. I think that creates a sentiment around what the hell is going on in America with some of these powerful people, right? Like I think you add that, you add the Greenland, you add what's going on in Venezuela, and all these other recent actions, even dating back to the Biden administration with seizing Russian assets, right? Like that all erodes faith in the institutions of America. So, yeah, huge threat. I think if you had to put like a time frame on it, and I'm not saying like to the day or year or anything, but do you think we're close to a new I don't necessarily want to say reserve currency, but a new monetary order globally? Like, do you think we're within 5-10 years of that, perhaps?
Yeah, that's what I think is happening now. I mean, I think the new monetary order is going to revolve around gold. I mean, that's the only thing that works. That's why central banks have been buying it. It's not an accident that they've been loading up on gold. So the question is, what form is it going to take? But there's no question in my mind that the monetary structure is being reoriented around gold. And the biggest loser in this is the U.S. and the dollar. Americans are going to feel a substantial difference in their standard of living as a result of this change. But I do think it's going to be a positive change for the rest of the world. In fact, that's why they're embarking on this. The world will benefit when it no longer has to bear the burden of subsidizing the United States.
I've heard some things that the U.S. could actually benefit from a gold standard because it allegedly has the most gold in the world in Fort Knox and so forth. Do you think there's any truth?
Well, we don't benefit from a gold standard for that reason. We would benefit from a gold standard the same way that any country would benefit from a gold standard versus the fiat system that we have today. If we went back on a gold standard, it would mean the U.S. government would have to substantially cut spending. The U.S. government would have to get a lot smaller, and that's a good thing.
Yeah.
Right? And that's why a gold standard is good, because it places a limit on what governments can spend and how big governments can get.
Agreed. So going to jump a little bit because last time you were on, you made the point, and a lot of our audience is investors in gold and the associated miners, gold bug audience largely. So last time you were on, you made the point that gold miners were deeply undervalued relative to gold. Now, that was a year ago, but you said that analysts were using kind of unrealistically low gold prices assumptions. Since then, obviously, a lot of miners have re-rated a lot higher. Do you think that the value gap has now been recognized in the gold miners, or is there still a disconnect between gold price and the miner valuation?
No, I think the value gap is actually widened, especially with the recent declines that were triggered by the pullback in the metals themselves. But the price pullbacks that we've seen are really irrelevant to the long-term profitability of these companies, because these pullbacks are temporary. The trend of higher gold prices and higher silver prices are still in place. And $120 isn't going to be the high for silver. $5,600 isn't going to be the high for gold. We're going much higher. And these gold stocks are still priced for silver and gold prices that are much lower than where we are now, even after the pullback.
So I had Rick Rule on a week or two ago, and he was talking about the 1970s. A lot of references to the 1970s with the guests we've had on lately. And they said, he said, gold went from, I can't remember, it was like $30 to 100 and then 200. And then it collapsed back down to 100 in the 1970s before proceeding to 800, I think, by the early 80s. So he said a correction in gold is not the end of a bull market. I assume that's kind of your take as well. This latest pullback was just a natural. It happens, I guess I could say, within a bull market.
Yeah, and I don't think we're anywhere near the magnitude of what happened in the 70s yet. When you're talking about $35 to $850. This really, gold traded in a range, and the breakout really occurred when we got above 2,000 in 2024. Mm-hmm. So since the breakout, the price of gold has more than doubled, but hasn't even tripled. Where, during the 1980s, gold went up more like 20x.
Yeah.
So we got a long way to go, I think, before a substantial pullback is really in order.
You obviously you're in the gold business. One thing I always wonder with some of the positions I take, and I try to keep a sober viewpoint on, is, am I in a crowded trade, right? And I'm more longer term. I'm not looking to trade regularly, but I don't like to be in crowded assets. And, being in the gold business, are you seeing an uptick in investor interest in the space, specifically on kind of outside of institutions, but more on the, let's call it, retail front?
Yeah, we only saw a real uptick very recently, where we got a lot more inquiries and buys in the last week or two. But prior to that, it was very quiet. There wasn't a big interest in gold the last couple of years. In fact, there was less interest than in prior years. So we had this big move from 2,000 to 4,000 with business being relatively slow. It didn't really pick up until, we got above 5,000, until silver started making these big moves. So, that may have been a very short-term indicator of, like a top that we got, like a correction was coming. Mm-hmm. But if you're in gold and silver, you're not in a crowded trade. There's hardly anybody else there. I mean, if you took random surveys of people on the street, hardly anybody owns gold and silver. I mean, other than like jewelry, stuff like that. But they haven't gone out and bought any as a store of value, as an investment. The crowded trades are like AI, right? Everybody in the stock market's got AI exposure, or crypto. I mean, Bitcoin is as crowded as you could be, right? I mean, you go to a Bitcoin conference. I've been to several now in the last year, and these things are enormous. Some people are there. And so that's where you need to be worried. And, as we're talking, Bitcoin is breaking down. It's below 67,000. So it's actually, $2,000 below the 2021 high, which is pretty significant, because I don't know if Bitcoin has done that before, where it's made a big high and then gone on to make new highs, but then gone back and gone below the prior high. I don't know if that's happened yet. But, the air is really coming out of this bubble, and, there's a big crowd in there that needs to get out.
Let's jump into that. You've taken a lot of heat over the years for your stance against Bitcoin, and you never softened that position. Big respect. I've seen you at some of the conferences, and you're the only guy there who was against Bitcoin, and he stands strong. And look, after everything that's happened in the Bitcoin market, you've been proven right. Do you still? I know the answer now, but do you still believe the major downside in Bitcoin is in front of us?
Yeah. I mean, look, Bitcoin is still 67,000. That's a lot of money for nothing. And so it's got a long way to fall. And, I don't know where the new buying is going to come from. I don't know who really wants to buy it at this point. I mean, everybody who wants to buy it already owns it. Now, do the people who already own it, are they going to cough up more money to get even deeper into this thing? I don't know. I think it's more likely that a lot of the hot money that got in after the Bitcoin ETFs were launched, I think that money is likely to give up on the trade. The hardcore Bitcoin maxis, I mean, they'll take their Bitcoin to the grave. I mean, they're never gonna sell it. But there are a lot of people who have come in recent years who don't have that kind of conviction, that just bought it because they thought they could make some easy money. And now that they're losing money, not only are people losing money in Bitcoin, but they're losing the opportunity of making money in something else. Because there's still a lot of inflation eroding away the value of your money. You got to do something. And, people that bought Bitcoin could have bought gold. They could have bought silver. Could have bought the S&P 500. They could have done a lot of things that would have made the money. In fact, they could have just put their money in T-bills and they would have beat Bitcoin. And in fact, look at MicroStrategy. MicroStrategy's down now at this point almost 10%. He spent 5 years and $54 billion on Bitcoin. And all he has to show for it is a 10% loss for 5 years of Bitcoin buying. So if Strategy didn't make any money on Bitcoin, the poster boy of Bitcoin treasury companies, right? Why should anybody else buy it? Didn't work for Strategy.
Fair.
They lost money.
Fair, but I think the Bitcoin guys will argue, it's a blip, or this is a natural correction or whatever. I mean, you can make the argument from 1980 or whatever to 2000. Anybody invested in gold made no money. I mean, it didn't even move.
Yeah,
for 20
if they bought it at that peak, but if they bought it a year or two earlier, they still did pretty good. Saylor has been buying Bitcoin for 5 years and he's losing money.
Yeah.
But yeah, I mean, anybody can argue. I mean, the Bitcoiners will always argue something to try to, justify or rationalize, any decline. But they don't know that, there's a spring on the other end of this winter. This could be the ice age for all they know. I mean, Bitcoin doesn't have that long a history of being around, and the history of it being involved with Wall Street is even shorter. Right? You'd have to really just start, with all the ETFs. Since Wall Street's got involved, it's only a few years. So this could be a very different animal than what they're used to. There's a lot of declines. There's a lot of leverage in the system now that didn't exist 10 years ago, 15 years ago. People weren't borrowing against their Bitcoin when Bitcoin was $1,000. But a lot of people have taken out loans collateralized by Bitcoin.
Yeah.
The lenders are going to be selling that Bitcoin.
Yeah, no, the leverage is
and
a
they
concern.
don't really care what their price is as long as they can cover what they're owed.
So, I own Bitcoin. I bought it for speculative purposes long time ago. A very small allocation. I do think it's a technology with potential applications that have yet to be proven. But you've been on the ground in the Bitcoin world. I don't know if you've invested, but you've been opposed to it. But your knowledge of it is very expansive. And you never had an itch to say, yeah, you know what? I'm seeing a lot of interest in this. There's a lot of capital flowing into this space. You never had an interest to say, I'll make a speculative bet that people are going to keep buying this.
I thought about it when Bitcoin was, I don't know, 200, 300, 400 around then. And I found that a friend of mine who had a hedge fund was buying Bitcoin in his hedge fund. And at the moment I said, what, really? And this was a smart guy. And so I thought to myself, if this guy is doing it, more people could fall for this. And maybe I should just buy some because they could really drive up the price. And the main reason I didn't get into it, other than the fact that I didn't believe in it. So it would have just been kind of like, hey, this could become a big bubble. So let me just buy some of it now so I can sell it, at a later time.
Right.
But because I had thought very seriously about buying it when I first heard about it and ultimately didn't do it. And of course, when I first heard about it, it was, I can't remember if it was above $1 or below $1. I mean, it may have been below $1. But the fact that I didn't buy it then made it mentally difficult for me to pay so much more for it. Now, of course, had I known it would be this high, I mean, when you're talking about, I didn't want to pay $300 for a Bitcoin thinking that was a high price. It was when I rejected it at $1.
Right.
And it was 300 times higher. But obviously now compared to $70,000, right, that number looks cheap. But ever since then, I mean, once it got, to even to 10,000, and I thought that it could go up. I just, at that point, I was like, I ain't going to get involved in this. And of course, it went up above 100,000. And it may never get above 100,000 again, if that was the top. I mean, and it's going to be a lot quicker on the way down. In fact, even though we've moved down now in Bitcoin below 67,000, we haven't really had a crash day. We haven't had like
Right.
Bitcoin down 20 or 30%. I mean, that day is still coming. We haven't even had any panic selling yet because, Bitcoin is down, 8% today. That's nothing for Bitcoin. It's like, it's like a normal business as usual. Bitcoin can be down 8%. So we haven't even had any kind of capitulation, any kind of panic among the diehards. So,
but
that's coming.
Any of these Bitcoin guys, I mean, you've talked to the biggest names in the Bitcoin space and you've debated them all. Do any of these guys own gold?
Some of them do.
Okay.
Some own both. But generally, they have a much higher percentage in Bitcoin, which is unfortunate for them. But
so you mentioned,
and a lot of people, of course, not only do they own Bitcoin as an investment, but their livelihood is Bitcoin. They're in a Bitcoin business. They own some kind of Bitcoin company. Mm-hmm. So there's not a lot of diversification there. So they could just get wiped out, right? They're out of business and they're out of money, and they lose their nest egg or their safety. So yeah, I mean, people are in a lot of trouble. That's why I posted today. The unemployment rate. I think you're going to see a meaningful bump in the unemployment rate because I think there's a lot of young people who were Bitcoin millionaires who did not have jobs. They basically borrowed money against their Bitcoin.
In a world of rising deficits, currency dilution, and market volatility, many U.S. investors are choosing to diversify their retirement accounts with assets like physical gold, silver, and even crypto. This video is sponsored by iTrustCapital, which offers a platform for Americans to hold physical gold and silver, as well as crypto, directly inside a tax-advantaged IRA. Designed around transparent pricing with clear premiums over spot and no hidden storage fees, iTrustCapital offers something that still isn't standard in the precious metals IRA space. So if you're a U.S. investor looking to learn more about owning gold, silver, or crypto inside an IRA, use the link in this video description. Americans may be eligible for a $100 funding bonus when opening and funding an account with iTrustCapital.
I think that Bitcoin is going to get sold, and they're going to be left with capital gains taxes that they may not have the cash to pay because, they already borrowed it and spent it. And they're going to be looking for jobs because how are they going to live? If they can't borrow more money to pay their bills, how are they going to pay their bills? Well, they need to get a job. And, so if they start looking for work, now they're unemployed. Before they weren't unemployed because they weren't out looking for jobs.
You mentioned earlier you thought that, or I think you insinuated that, maybe this Bitcoin sell-off and the crypto, let's call it crash or massive correction, may be weighing on precious metals market. How do you tie that in? There's such a small crypto.
No, because
such a small
I think
market.
that, yeah, well, I think there are people who are getting margin calls that may be meeting those calls by liquidating other assets. And those can be gold and silver ETFs that they may own, maybe gold or silver backed stable coins that they may have in the same wallet as their Bitcoin or their Ethereum. So people are, maybe trying to deleverage, de-risk their portfolios. And if they don't have more cash to send in, they just have to sell down some of their leverage positions. And I think also there's a fear of that. And so a fear of a lot of forced selling could cause potential buyers to back away from the market. So you have this selling coming into a market that doesn't have a lot of bids. But I think it's just an opportunity in the metals. I don't think the decline will last long and it will be over quickly because once the forced selling is gone, then who's going to sell? Nobody. And then the buyers, come back in once they see the coast is clear, that it's not a panic to get rid. And now they come in, they want to buy, but now there's no sellers. And so the price rapidly moves back up.
Lastly, Peter, what do you like more right now, gold or silver?
Well, I like them both, but silver's down so much today that it seems like I would want to buy it today over gold. I mean, what is it down 17%?
Yeah.
I mean, it's just some crazy amount. It was over $90 yesterday.
Mm-hmm.
So yeah, gold's only down 2% today, but silver's down. Okay, now it's down 13.5%, but it was down a lot more. I mean, it got down to about 72.5. So from 90 to 72, $18. I mean, that's like 20%, like from yesterday to today.
Why is silver so much more volatile? Just because it's a smaller market?
Well, I think it's just less liquid.
Yeah.
The central banks are not there buying silver.
Yeah.
And it had a bigger move in a shorter period of time. So it was a little bit more vulnerable, probably. There may have been more spec money in silver than there was in gold.
But
it's interesting that gold is holding up so well.
Yeah.
I mean, it's only down $100. I mean, that's not much.
Yeah. When you go out and, acquire gold or silver, do you literally go out and buy the physical only?
Well, we encourage our clients at Schiff Gold to buy physical gold and silver, but we also have a virtual program at tgold.com where, we will store the physical silver for them and not ship it out to them. So we encourage, both ways of owning gold that you self-custody and that you allow a third party to custody, especially if you want to use that gold as a medium of exchange, which I am going to, try to help people do. Use their gold as money, not just as a store of value, but for transactions. It's ideal for transactions, especially when you marry it with technology. Mm-hmm. Either it's blockchain or an internet-based system that enables the transfer, the instant and near costless transfer of ownership of gold. So to conduct commerce in gold, you don't have to, transfer the physical gold. I don't have to take my gold and put it in your hand. If I own the gold and I can transfer ownership to you, then that's all I need to do. Because once you own the gold, it doesn't have to be in your possession, as long as it's being stored on your behalf. And if you have the same convenience, if I transfer ownership of gold to you and you have the ability to transfer ownership of that gold to anyone that you want, then we have a very efficient way to engage in commerce with each other.
No, you've been working on that concept for quite some time. Gold would have to be fractionalized or divisible to actually make it a medium of exchange.
Yeah, well, you could do that. I mean, you could easily do that. It's not hard, right? It's just as divisible as Bitcoin. Just as easy to divide tokenized gold as it is to divide Bitcoin.
Give me the mechanics high level on that. How does that work then?
First of all, you don't even need to put it on a blockchain. But if you have an account at T Gold and somebody else has an account at T Gold,
right,
and they want to transfer, $100 worth of gold at today's exchange rate to you, they just, enter that transaction. They just put it in their wallet and they say transfer this, and it just gets done.
So that is the mechanics. That is the mechanics. They would both have to have an account at T Gold for this to work.
Well, that's if there's no token. But once you've tokenized it and you've withdrawn the token, right? Now you have a token in your wallet. You can send any fraction of that token to anyone else, just the way you have Bitcoin. If I have one Bitcoin, I can send, one Satoshi to anybody else who's got a wallet, right? Well, the same thing would be with gold. If you had tokenized gold and it was worth $10,000 worth of gold and you wanted to send somebody, $1 worth, you would do it the same way.
Right. Got it. Well, I hope you're successful with that, man. I think that would
just
be revolutionary.
It works just like a stable coin, like Tether.
Yeah.
What's Tether? Tether is tokenized dollars.
Mm-hmm.
Tether also has a gold product that's tokenized gold. It's the same exact principle.
Which is becoming a pretty significant player in the gold space too. So interesting.
Yes,
I like
exactly.
that. I hope that's successful, Peter. I know I said that last question, but the one thing, because last time you were on, this actually helped reinforce my thesis of how I was allocating capital. What do you think the inflation rate, the real inflation rate is right now? Because I know obviously CPI and you have Trump saying inflation is done, but I still feel inflation is quite significant. Where do you see the inflation rate roughly right now?
I don't know. I mean, the money supply is expanding. Credit is still expanding. So we still have a lot of inflation out there. I don't know the exact rate. It's obviously higher than 2%. That's for sure.
Yeah.
It's hard to say because, all the official measures are not accurate. People are pointing to this truth relation thing that is saying that inflation or prices are rising less than 1%. So it's a little curious how that would be. I have to look into it, but that sounds very questionable to me.
Yeah, because inflation is, by definition, is the expansion of money supply. It's not prices, right? So it's interesting because the money supply is increasing, I think, between 6 and 8% a year right now. But that's interesting. Anyway, I don't want to take any more of your time, Peter. Where can our viewers find you online?
Well, if they want to get some information on T-Gold, just go to tgold.com and you can sign up and get an account. If you want physical gold at Schiff Gold, you could buy, especially, I don't know when people are going to watch this, but, silver is really on sale today. So even though it's still 150% higher than it was a year ago, it's cheap compared to where it was yesterday and a week ago. But physical silver and gold, buy them at Schiff Gold. And if you want to take advantage of the opportunities in equities, not only gold and silver mining stocks, but broader resource-based stocks and international emerging markets, stocks that will benefit from a weak dollar and a realignment of the global monetary order. We've got portfolios that we manage that are specifically designed to profit from what's happening and what's going to happen. And those portfolios have had incredible returns recently, last year, and so far this year. And I think those trends are going to continue. So you should reach out to our advisors at Euro Pacific Asset Management at Europac.com, or check out my mutual funds, which are also listed on the website and are available no load at every discount brokerage firm. So you can do it yourself using my funds, or you can have my team actively manage your portfolio. But just give us a call, because I think the sooner the better. And then listen to me, my podcast, The Peter Schiff Show, on Schiff Radio, on my YouTube channel. Listen to the updates I do at Schiff Gold, and follow me on social media, in particular X, where I'm very actively posting my thoughts on what's going on every day.
I love your live streams on YouTube. I'm one of the many thousands of people who tune in, man. So, Peter, thank you very much for your time today. Really appreciate it.